Ladies and gentlemen, thank you very much for joining us this morning. Very, very excited to be speaking with you. We're going to be talking about growth accelerated funding. That is funding that supports growth. In other words, not funding to back the recovery of a business post-COVID, but one to support growth. Your business is up, your business is established, your business is running, you've got growth opportunities that lie ahead. The banks have started to draw back internationally, interestingly. Patrick, I never mentioned this to you, but in the United Kingdom right now, you cannot get funding as a SME. In other words, a business with an annual revenue in rands of up to about 150 million rand. And the reason for it is that all the big banks internationally suffer from prudential requirement commitments and compliance. And what it means is that those banks, every time they lend to a smaller business as opposed to a corporate business, it increases their overall cost of operation. It's a problem that exists in order to try and create stability for the banks, but it's a problem that exists right across medium-sized business economies. And in South Africa, we suffer from it too. The banks don't lend because very often they can't. And yet, if you have growth ahead of you, to not capitalize on it and take advantage of it is completely insane. So we're going to be talking to you about what we can do with you if you have a growth intent, if you have a growth direction, if you have a big idea and you want to bring it to market in your already established business. Right. What impedes growth? And growth, incidentally, Venant, am I right? If your turnover increases and doubles, but your profit halves, is that successful growth? You know, it's exciting. Yeah, no, it's not very exciting at all. If your revenues increase dramatically and your profit doesn't grow more at a higher rate than your revenues, in effect, all you've done is built more revenue and created more complexity. Because if your business has been built right, it should be built in such a fashion that revenues increase at a good rate, but profits increase at a faster rate than the rate of revenue growth. It means that your costs are being moderated. What we've noticed consistently across all businesses is that there are three impediments to growth and value. Three of them lie in leadership. In other words, people have said entrepreneurship, business ownership is a very, very lonely journey. And Frank, no doubt, you've started your business, you've been growing your business. Oh, I see David Green has joined us. David, you have been in the game for some time now with your eyewear products. Business ownership is very lonely. And in that lonely period, in that lonely space and place, we face certain leadership issues that aren't well spoken about. The first is, it's our responsibility to respond to a completely ongoing, changing environment. I have no doubt that every single person over here has had to face incredible difficulties. From a South African point of view, we face ongoing political uncertainty. It seems to be taking time for things to come right. The movement and the promise made by politicians, by policymakers, implemented into the ground takes time. And yet we have to make decisions to drive our businesses in one single direction. How do we get that right is an important factor, because you cannot not make decisions. You've got to be constantly moving and capitalizing on opportunities that you see, but maintaining a steady direction. Hustling does not build an investable business. Hustling does not build a sellable business. The next thing is, we all need to have more time leading growth rather than doing growth. Your day-to-day business, if it sucked you in and it absorbs more than 20, 30% of your time, the likelihood of you leading growth is very, very low. Through good business design, you can build a business that will generate consistent, reliable, ordinary organic growth. 10% a year, 12% a year, 15% a year, 16, 17% a year. But next level growth that will get you up 30, 40, 50% a year, 100% a year, all possible, is only possible if it's being led by you. And then the big issue of succession and delegation. There's nothing more frustrating than getting some traction on the ground, Bernard, getting your team on board to implement it and make it happen. You think you've got it done, and next minute you've been called right back into the business in order to lead it again. If your team drives you and your business drives you, who's driving the business? Succession and delegation is essential to create an investable business. Operationally, the challenges that we all face are finding, winning, and holding new customers. It's becoming increasingly competitive out there. So the big question, what sets you apart? What makes you special in the eyes of your clients and customers is one that really needs to be answered. David, you selling eyewear right across the world through retailers who are overburdened with product. What makes your business special for that retailer in terms of a problem that it solves for them through a good experience? And your product certainly offers that. Next, how do you grow without chaos? If you think about what next level growth means, it means it's growth that comes over and above your year-to-year annual growth. It's the exciting growth, Frank. It's the thing that sets you apart in terms of your growth rates. There was a very interesting study done across one of the biggest banks in South Africa with what they refer to as their SME portfolio. They claim to have around 6.5 million businesses in their SME portfolio. The SME portfolio is the business doing up to around 300 million rands a year of revenue. The year before last, 2019, and guys, send your answer in a chat because I'm really keen to get your thoughts. What do you think the average revenue growth rate across that portfolio was in 2019? What percentage? What percentage? David, 15%? Baynard, less than 8%? What percentage? Frank, come on, you look like a good guesser. Kevin, you should have a good sense of it. Frank, 10%, Kevin, 10%. Inflation plus 3.8%. In 2019, inflation was running at around 4.8%. So the person who was closest was Patrick. Patrick, you were more or less right. JR, you were very close. JR Joseph, very close. Baynard, most accurate of the lot. So arguably, in South African terms, consistent organic growth rates are running at around 8-9% a year. That is unexciting for all of us on the screen. It's especially unexciting for a funder. Yet, if you cannot get it consistently happening, then how do you spend your time looking for the 30, 40, 50% annual growth? Because when you go to find that growth and you're looking for it, you're doing deals that are different to the day-to-day operational activities of your business. And when you get deals like that done, and your day-to-day operational business starts to become unstable because you can't grow without chaos, because you can't grow without, your team can't grow the business without you being center and leading it. it's really hard to move from where you are to that next level. And that brings us on to the purposeful team. It's fascinating for me because this is a global issue. Today, as a species, internationally, we are more educated than we've ever been in our entire lives. There is more free education and opportunities for all of us to upgrade ourselves and upskill ourselves than there has ever been in our entire lives. If you've got access to bandwidth, Sandville, in 2017, knowing nothing about how to code, I learned in the evening hours for free from YouTube how to code in Python. Man, if I can do it, anyone can do it. Education has become increasingly freer, skills have become increasingly more accessible. And yet to get the right people to do the right thing at the right time in your business is one of the biggest challenges that prevents you from being a leader in a business as opposed to being the central operator. The last set of challenges always lie in the future. It's around growth. How do you grow your revenues? Moderate your costs so they don't grow at the same pace of revenue in order to increase and fatten your profitability. Because your profitability has a big impact on your final valuation. And folks, question. Karabo, there are two destinations for every business. What are they? Sandville, what are the two destinations? Only two, globally. It's an absolute truth. As the sun rises and the sun sets, it's an absolute truth that there are only two destinations for every business in the world. Ooh, the chat's very quiet. Very quiet. And this is something, Ruan, you really spoilt it. Exit or close, absolutely right. First answer on the chat, straight and center in the middle. There are only two destinations. We either sell or we close. Because it doesn't matter how much you love what you do. David, time runs out for all of us. And to not be in a position where you can successfully sell your business is an opportunity lost to monetize years of risk and years of investment and years of sacrifice. Yes, you make your money day to day, you generate income, but you need to build a business that can be sold. That's what I mean by a job versus an asset. 94.6% of businesses in the United States, one of the most vibrant business environments in the world, where there is more money sloshing around than there are deals to be done, where there's more talent available than almost anywhere in the world, where government policies are favorable towards business, unlike here in South Africa. 94.6%, Frank, of businesses started in the US. And I'm not talking about startups, I'm talking about businesses 20, 30, 40 years in the making that have earned the business owners good income, close because they cannot be sold. We are good at creating income for ourselves. We are not good at building sellable businesses. And then finally, wealth. How will your business be valued? As time goes by, how will your business be eventually valued? Then 10 years from now, should you choose to sell, how will valuation work? We spend 10, 20, 30 years building businesses to generate income for ourselves. And on average, we spend between 30 to 80 hours selling our businesses. Businesses are not bought. They need to be built to be sold. Businesses are not funded. They need to be built to be funded. Food for thought. Here are the stats, global stats. 5.4% in the United States successfully sell from startup all the way through to final day. Most of these businesses are in their 20, 30, 40th year. Here is another environment that's far more business friendly than South Africa, Australia. If 94.6% of businesses started in the US failed to sell, folks, what do you think the number is in Australia? Australia is an exceptionally rich country. It's in the heart of the Asian economy. It has a highly educated population. It's got extensive immigration coming out of the Far East with highly skilled individuals. It's vibrant. And government loves business there because business pays tax. What is the percentage that you think failed to sell? Nothing on the WhatsApp. Convenant, you're good at guessing. You so far have been the most accurate with statistics. 60%, David? 60% because the Australian environment has a lot more vibrancy, oddly enough. 60%, 12%, 95%. Guys, 97.2% of businesses started in Australia failed to sell. We are taught how to build businesses to make money. We are not taught how to build businesses to create assets. When it comes to family businesses, 27.3% of businesses passing from the founding generation, the mom, the dad, whoever it may be, to the succeeding generation, the sons, the daughters, the cousins, whoever it may be. Only 27.3%. Kevin, you hear that? Mr. Bartlett's doing okay. He's bucking the trend. So why do you do what you do then? If I've shared all of these stats and insights with you, why do you do what you do? Frank, why are you doing what you're doing? Is it only to make money?
Do you want an answer?
Yeah, of course I want an answer.
Okay, fine. Well, the reason why I'm doing it is because I have the skills to do it.
Okay, one of the things
and create jobs and do what
we definitely need to hear you better, Frank. It was the line broke up. Try again.
Okay, can you hear me now?
Yes, we can. It's much better.
Can I just turn off? Let me just turn off this.
There we go.
That might be a better line. Okay. So basically, the reason why I'm doing what I've done is because I've been in the sector for quite some time, and I've understood the gaps. And I started a business just because I wanted to do that. It blossomed into something that's getting bigger, and unfortunately, I've got issues of succession, of keeping the business going to grow the jobs, etc., etc. So the questions that you asked earlier were very, very important.
If I hear you clearly, there was opportunity. You do what you do because you spotted an opportunity. David, why do you do what you do?
And the thing is, it's such a great opportunity that I can't stop. Even though I do want to do other things, this particular business cannot stop because of the potential that it has and also the business that has been generated.
I hear you.
So we have to take it to the next level.
I hear you. You will take it to the next level. And I'm going to tell you how soon. David, why do you do what you do? In a nutshell.
I have a lot of fun, and I believe that I truly am making a difference out there.
Okay. All right. Guys, all of you, me included, suffer from optimism. If you didn't suffer from the sickness of optimism and idealism, you would never have started a business. I never primed, Frank. I never primed David. If you listen to the messages they shared with us, and I'm betting that this applies in part to you too, both of them in effect said they could make the world a better place. Both of them in effect believe that in doing what they're doing, they're making a difference. It applies absolutely to me. I'm sure it applies to you. But optimism is not good enough. Optimism drives the idealism, which is vital. The purpose behind why we do what we do needs to be crystal clear. I want to share an idea with you. Okay, what is an asset? What is an asset? Because assets get sold. Assets get invested into. And an asset has three criteria to it. The first thing is that it grows capital. Next, it grows independence, income, and next it can be traded. So think of it this way. Patrick goes and buys a share on the Johannesburg Stock Exchange for 100 Rand. He's going to hold it for 5 years. He needs three things to make his dream of turning that share into wealth come true. The first thing he wants is a dividend year after year after year. Let's say 20 Rand a year, he gets a dividend. At the end of 5 years, he's created income growth of 100 Rand. In our world, we call that salary, we call it bonuses, we call it incentives, we call it dividends in our own businesses. At the end of 5 years, Patrick sells the share. And he's lucky enough to sell it for 200 Rand. He paid 100 Rand, he sold it for 200 Rand, he's made a 100 Rand capital gain. That was a really good investment. But here's the thing. He sold it because he could. He sold it because there were buyers out there. And he sold it because the share's performance did not depend on him. Our purpose as business owners has to be beyond our passion to build a business that of a day can be sold. Matthew, there is no value 10, 15, 20, 30, 40 years in the game to land up not being able to capitalize on your business's exit through a successful sale. And a sellable business has 5 features to it. It needs to be special in the eyes of your customers, what we call a brand. It needs to operate with systems. You need to have the right people doing the right thing at the right time. It needs to be growing well beyond organic growth rates. And as it grows, it should be growing revenue and profit, not revenue, costs, and profit. I'm going to talk to you very briefly about how you get this done right. The first thing is, when you talk about what makes your business special, because all of us have got competitors out there, the only truth is that there are more and more and more competitors that we face on a daily basis. That talks to your destination, the purpose of your business, the reason it exists. And Frank, I say this with the most profound level of respect, my friend. It's not to create jobs for people. It's to solve a problem for your customers. It's to solve a problem for your customers through a great experience. If your business exists to achieve that, all the other benefits will flow. If you think about yourselves in your everyday life, when do you spend money? The only time you spend it is if you're having a problem solved and you're getting it solved through a great experience. It's incredibly hard to get this right. David, you sell eyewear products. Who's your customer? Because you sell through retailers, but Frank is the final customer who, when looking for some eyewear, or rather Matthew is, Matthew, when you replace your specs and you look at a David Green product, you're going to a retailer. So your business, David, has to solve a problem for Matthew and has to solve a problem for Specsavers. The retailer and the end client. And no amount of saying that my product is beautifully crafted, is unique, my service is incredible, my price is competitive, has any impact until you get that part of the business right. It forms the foundation of what allows an asset to be built that can continue to grow without you. From there, how do you bring it to life? All of us share something in common. We all have to market our businesses to generate new leads and clients and customers. We all have to perform a sales function to get them on board. We all have to run our operations to deliver the service and products and promises that we've made. We all have to manage administration to give them a good experience. We all have to manage a team. We all have to manage our money to make sure there's enough oxygen in the body of the business to continue to operate effectively. Those are the functions of a business. And if the functions of a business are built into a single system, where each function operates effectively, and they come together to create one experience for your client and customer, it brings to life the positioning of your business. That brand that makes your business special. It is a design and build issue. From there, how do you bring it to life? You bring it to life by getting the right people to do the right thing. Who will operate the marketing systems to find new customers that you have built in order to meet the promises you've made to clients around the problems you solve and the experience you create? Who will operate the sales system, the activities involved in selling, the activities involved in servicing and delivering, the activities involved in administration and management? How do you employ someone to do it if you don't have a system for them to operate? And how do you build a system if you have not understood what sets your business apart? 3 elements. Those 3 elements, when you get it right, generate organic growth on a consistent annual basis and give you the most precious thing available: time. Position the business right. Build the system of delivery. Get your team operating the system. And you will spend 10 to 20% of your time in the business. The remaining time is available to be out of the business and focusing on next level growth and innovation. The things that take you beyond the organic growth rates. The elements that any funder wants to back, for so long as they can see that you positioned your business effectively, the system of delivery is in place, and the team is being operated. How can we work with you? Let's get into it. The first thing we do with you is we build out a growth plan. We look at your business today. We see where you want to be 5, 10, 15 years ahead. And we see what the gaps are, the challenges are. That allows us to build a completely configured growth plan to work with you from where your business is today to that future state. From there, we implement alongside with you and your team that growth plan. You know, I read a fantastic article on outsourcing. The outsourcing article was around YouTube business owners. When you build a YouTube channel, which is a millennial business in more ways than one, especially out of the US, when you build that type of business model, you're outsourcing extensive elements of the activities. And where they're outsourcing them to, they're outsourcing it to India. India has exceptional tech capability. It has deep, deep, deep digital capabilities. You're living in the US. Cost of living is substantially higher. Cost of living in India is substantially lower. People are arbitraging the opportunity over there in order to release time for them to promote their channels and to create the content. There's a big question on how we spend our time because it's a limited resource. If we spend it grinding away in our businesses, as opposed to investing it in looking for next level growth, where do you think you'll get the greater return? In us working with you, we get positioning absolutely sorted with you and your team. And we work with you to establish the system of delivery and get your team operating that system of delivery. So we can spend most of our time with you on next level growth and opportunity. And it's when we get to that stage over there, when you're growing a business way beyond your organic growth rates. In other words, you were jogging along quite comfortably. Now you're sprinting. When you sprint, what does the body need? It needs more oxygen. And that's where Aurik Capital comes into play. We have a relationship with you. We see the direction of the business. We can see to maintain aggressive growth rates, you need oxygen. And because we have the relationship, and because we've seen the performance, and because we understand the business, our ability to invest and support that becomes substantially easier. We invest anywhere between 1 and 10 million rand in any asset. We take a minority share. It's an equity investment, so we become real partners in the business. The reason it's an equity share is because next level growth typically requires equity, not debt. Impossible to find debt. If you find debt for next level growth, the thing about next level growth is that the money comes in to build and accelerate the business. If you get debt on board, the money comes in and the very next month you have to start paying the debt off. Well, if you're paying the debt off, then how do you take the money to invest it in growth? Next level growth is an equity game. Organic growth is a debt game. The way that we apply it, it's for growth momentum, not potential. Frank, we would have to get some things straightened out, get the business on an even keel, the potential you spoke about earlier. We would need to be sure that you can spend 70% of your time on next level growth, so we can work with you in order to make that growth happen. You can use it to buy plant equipment and stock. People, software, marketing, some of the true drivers of next level growth, where the growth is coming through in revenues and not costs, where the gap between your growth rate and cost rate moderates like that to create this big yawn, a big gap between the two. New markets and customers. Kevin, we bed, bio, build down in South Africa. It's a simple model to get right. And then you open up the UK, you open up the US, flat packing at first with the view to then eventually manufacture in the local markets. The duration for which the investment remains in place with you is 5 to 7 years. We raise money from the market, and we have an obligation to return that money back to the market. They expect us to return that in a 5 to 7 year period. How do we manage risk and performance for the people that gave us the money to invest in businesses? Firstly, we work with clients that we know. We work with growth that we understand, the path that I mentioned earlier. And we track performance using a whole lot of data and digital dashboards that help us forecast and understand how much additional funding the business needs to maintain growth rates. The process of funding, the process of valuation is mathematics. And we play the mathematics very much in the favor of building a business into a sellable asset. How do you exit a business of this nature? About 50% of our clients exit through corporate buyers, corporates that are looking to buy their profits, buy their markets, buy their innovation, buy their teams, buy the ongoing growth of that asset. They're private buyers that come into the market as well. And in some cases, IPOs or listings on the Johannesburg Stock Exchange. If you're in a situation where you don't wish to exit the business, but we as a funder need to get out, at that stage, you would have capitalized on the oxygen provided to have a business that's substantially bigger with strong, stable growth in play, the opportunity to raise debt and pay it off over time, to exit us as an investor, then leads you 5 years down the line with 100% of the total business, which at that stage, which should be between 5 to 10 times bigger. So you land up with 100% of the far bigger asset. There's a process we follow. After this, we'll send you a little note. And on that note is just a question, really. It's a small application with 4 questions saying, would you be interested in having a further discussion or not? If you say yes, we have a provisional engagement. We come to look at the business. We have a conversation with you. We look to see where you want to be 5 to 7 to 10 years from now. We look to see what challenges would need to be overcome. If there are challenges that we are able to assist with, we would let you know and we would put a proposal down together. If it was acceptable, we would go through a process to start. Once we've started, there's a funding workshop so we can get the valuation of the business done right. And once that's done, we go to InvestCom, where Patrick, myself, and 2 or 3 others would sit to really look at the business, really look at the future, and make sure that should we invest as partners with you, as partners to you, we are investing in something that will grow and give a good exit. "45 minutes to make that provisional engagement. It might require 1 or 2 or 3 meetings. But there are no commitments until we get to the funding workshop period. By then, we will all have a very clear idea of each other and what lies ahead and what the opportunity is. Why now? Guys, look at this. What I'm showing over here is the FTSE JSE All Africa Share Index. This was March. So we shut down in April, right? Look at that. Bang! Who sold all their shares and panicked? I hope you didn't. Who sold in February last year? I did. I don't know why. I just got frustrated with my portfolio and sold. And the next minute, this thing crashed down to there. And my financial advisor made me invest again. I thought he was mad. But look what happened. We then had a second blip over here, the impact of the third wave, the uncertainty created largely around Trump, the rising death rates in the United States, the lies around when the vaccine would be ready or not. Then the vaccine started to come into play. And this takes us up to March, April this year. Now, granted, these are listed entities in South Africa. But listed entities in South Africa generate the SME economy that we will play in. It's a good time now to invest in growing your business. Because I promise you, most of your competitors are nervous too. And what it means is that by the time we're sitting June, July, August, and the vaccines across the developed economy are largely satiated, and vaccines across the developing economy have started to come out, the United States is talking about the biggest next 3 years of growth ever to be anticipated in the last 30 years. It will pull the global economy, and through that we will be pulled. Already, if you look at the price of iron ore and commodities in South Africa, It's feeding the new supply chains that are being built and the manufacturers to get the supply chains going again. I fundamentally believe we're on the cusp of some really exciting growth. In South African terms, which is 2-3% a year. For big businesses, and 20-30% a year for the rest. And with that, I end. If you have any questions, I'm very happy to field them. I've taken, no, I'm on time. I am on time, Pippa. Yeah. I said 50 minutes. I'm sitting at 48 minutes. If you have any questions, please let me hear them and I'll try and address them.